Time to bring on board independent advisor Munesh Khanna. Munesh, it's been a while. Welcome back. Good to have you back on ET now. Munesh, Indian markets have been struggling after the budget. For this week, Nifty is down over 3%. What's wrong, and where do you see markets are headed in the near term?
I think the markets, at least in the last couple of months, have been solely dependent on the amount of liquidity which has been there. And that itself has made it very volatile. But unfortunately, along with the liquidity issues, we've also had a very insipid budget. The market was expecting a lot from the budget. Unfortunately, just given the political compulsions, the government has been unable to deliver on not only most, but at least even some of the promises. And that has created a sense of despondency as far as the market investors are concerned, which has led to the volatility that we've seen and a negative downward bias.
Munesh, hi, morning. Looking at the current circumstances, when do you see the reform process head over the next few months?
I think really, we look at it, the government really is in a tight spot in order to roll out any kind of significant reforms. I think we may have a little bit of tinkering with some of the reforms, but as far as any significant reforms are concerned, I guess we could take the view that the government's hands are pretty tight. We've got a situation today where the railway hike has also been rolled back. So in all, I think unlikely that we are to see any significant reforms in the short term or even in the medium term.
So Munesh, my follow-up question is that really making market nervous? The AG report, rail fare has been rolled back. The word policy paralysis, which got this market down in the second half of 2011, looks like that problem is surfacing up again.
Clearly, there is clearly from the market perspective, there is a clear acceptance of the fact that we've got a government which, even if its intentions are honourable and they actually want to get us onto into the reform process, it is really not in a position, given the politics dynamics which are there, given the UPA configuration which is there, to be able to actually ensure that there are some reasonable reforms which can actually take place. And I think more and more the market is has recognized this reality. Also, added on to what we are seeing in terms of the coal scam, in terms of the other governance issues that we are seeing across the country. I think it's not only limited at the center, but even in the states, which are making foreign investors definitely nervous. But I think it is also making domestic investors, domestic business, more and more circumspect and more apprehensive about the state of the economy and the way forward.
Munesh, so how does one approach the market then? Is it time to stay put or buy on declines?
I think by and large, I'd say that one needs to be very cautious in approaching the market. But however, if there are investors, and one has seen over a period of time that there are very few investors who really have the conviction and the ability to think long term. But if, and as an investor, you are looking at long term, then even in this market, at these valuations, there are businesses, and these are across industry, which are cash flow positive, which are in a pretty good shape in terms of the capitalizations, have got low debt. But anyone approaching the market today needs to have a long-term view.
What are your expectations from the forthcoming credit policy? Do you think ahead of credit policy, expectations are now getting slightly diluted given the way how crude has moved?
Again, like everyone else, I'm also an observer of the market, and like most of the others, I was also expecting that there would be rate cuts by now. Unfortunately, now just again, given the dynamics, one doesn't see rate cuts before June coming in. And that is disappointing because really, I think we've reached a stage, and I think everyone from an economic perspective is clear that any growth that we want to see has to be investment driven anymore. We've been a consumption driven economy, which is good, but going forward, we have to increase investment across boards. The Indian industry, government, infrastructure, we need to see investments, and those will come in only if capital is at an affordable cost.
So Munesh, what target have you set for the Sensex for year end, and will you take a relook at your earlier target now?
It's at least for the past 6-9 months, it's been very difficult to predict where the Sensex is going to be. I think we are range bound. We will continue to be there, maybe 16,500, 17,500. We will go up. There may be dips below that for a short period of time. But I think more or less, just given the state of the economy, given the lack of reform process, given the way that the government has approached a lot of foreign investment, we are going to be pretty much, I would say 16,000 to 17,500, unless there is a significant reform initiated by the government. Then one could look at revising one's targets.
So Munesh, where are you advising your clients to put their money to work? Where do you expect the margin of safety is strong and the near-term earning visibility is also clear?
Really, I don't have that at this point of time. But like I said, I think across industries, across sectors, you will always find one or two companies which have got good cash flows, have got good capitalizations, have got low debt. I think those are the kind of companies that to pick up are ones where are cash flow positive and have low debt burden, because given the state of the economy, like I said, things would get a little stretched and a little rough in the coming months.
Munesh, is there any sector which looks attractive to you at this point of time?
Again, it's company specific now. I don't think, I have an answer to sector specific. I mean, there are the standards, you said that yes, consumption on education, pharma, low cost housing, real estate companies which are on low cost housing are positioned favorably compared to others, but it's a relative discussion.